And welcome to Safe and Secure Retirement Television. My name is Cynthia DeFazio. I'm joined today by Jordan Flowers, and Jordan is a retirement planning specialist with Wealth Financial Services and Tax Advisory. Jordan, how are you today?
I'm doing fantastic. So nice to be with you, Cynthia.
It's so nice to see you again, Jordan, because I know you've been so extremely busy since the show began. Let's talk a little bit about what life has been like in the office for you.
It's been crazy. We have a lot of clients calling taxes, a lot of tax questions, tax preparation for future tax increases. We're reviewing our clients' retirement plans. It's been very busy. So our office, if people choose to call in, we're sometimes booked 2, 3, even 4 weeks out. So
wow.
It's pretty busy, but I love what I do. I love my job, so it's not a bad thing to be busy.
Absolutely, especially when you have such a passion for helping others, and you do, and it comes across loud and clear. We've talked about this in the past, that your passion comes a lot from your father.
Correct.
And some words that he said to you.
Yeah, he told me people don't want to know how much that you know all the time. They just want to know that you truly care. And those words resonated with me from an early age, and I take it to this day. And when I have a long day at work, I always think, can I help these people? How can I show people that I do care? And those kind of words and caring for people really helps propel me to keep on doing what I'm doing, help as many people as possible have a safe and secure retirement.
That makes perfect sense. Let me ask you a question, Jordan. How important is it for someone to have a plan in place as they're approaching their retirement years?
It's crucial. If you want a successful retirement, if you don't want stress in retirement, you need to have a plan. Okay, we talked about in earlier segments, people plan for a lot of various things, but retirement is the longest vacation of your life. If you don't plan for that, it may not be enjoyable, or you may not retire sooner than you thought you were going to retire, but having a plan gives you peace of mind, so you know that exact date when you retire, you're never going to have to go back to work. And you know that you can do the things that you truly want to do, but if you don't have a plan, you just have hope. And hope is great for world peace and a lot of different things, but hope doesn't get you to your destination.
Sure.
We create the roadmap. We create the comprehensive plan so our clients take away all the guesswork. They know that they're going to be okay. They can have peace of mind. They can live a great life. And a plan is the most crucial thing anyone nearing or early in retirement can do for themselves.
Jordan, we talked a little bit about the phases of someone's financial life, if you will. Can we go into greater detail what those phases are?
Yeah, before the show, we talked about that a little bit. I actually like to equate it to Mount Everest, believe it or not. Okay. I haven't climbed it. I don't know anyone that has,
No.
But if you do climb Mount Everest, on the way up, a lot of people try to get to that summit, but most people, they actually die climbing down Mount Everest,
That's
not
staggering.
on the way up.
Yeah.
And why am I talking about Mount Everest? Well, in retirement, when you're putting money in 401ks, in your working years, we call it the accumulation phase. You're putting money away in your accounts, and you're growing and growing, growing your assets. But once that paycheck stops, and once you stop working and are in retirement, you now change gears. You're now in your distribution phase. And that could be to yourself, that could be to the next generations, but it's not about how much can I grow, it's about how much can I preserve for my family, and how can I take income off of the money that I work so hard to achieve. And that's kind of a mindset shift, because everyone wants growth, but in retirement, we do want growth as well. We want competitive growth, but it's more about income. How can you live off the assets that you have? And dying, in retirement is, in a sense, running out of money. And that's what we avoid for all of our clients. We create a plan to make sure they never have to run out of money and make sure they have a solid plan in place. So changing gears from accumulation to distribution is tough. And sometimes people are working within the same advisor for 20, 30 years, and that advisor focuses on accumulation. Okay? He doesn't always focus on distribution. We are the retirement distribution specialists. We focus on that 100% of our time, and sometimes the advisor you had 20, 30 years ago may not be the best fit for the next 20 or 30 years because they don't do the same things. They don't look at Social Security planning. They don't look at tax planning. A lot of times if you ask your current advisor, a tax question, they refer them to go to your CPA or accountant.
True.
And that's not always the best answer in my opinion, because I believe good financial planning incorporates tax planning, because it's not what you make, it's what you actually get to keep.
True.
And we want to maximize every single dollar. Okay, if you look at just a simple illustration, say you needed $10,000 off your IRA in retirement. Okay, if you pay taxes, say at 20%, you get $8,000 that you get to spend after taxes. Now, what if tax rates double and now it's 40%? Well, that same $10,000 that you take out, you only get to keep $6,000.
Wow.
What good is making all this money if it's going to go away to tax liability?
Sure.
So I want to make sure we still make competitive returns, but we also are minimizing the tax liability on your accounts, so you keep more in your pocket and don't give it to Uncle Sam, because I don't think anyone wants to pay Uncle Sam more than you have to.
Exactly.
It's not your real uncle.
Exactly. Jordan, let's talk a moment about the difference between tax planning, tax preparation. What are the two differences
It's a great
there?
question, Cynthia. So this is no offense to any CPAs or accountants out there, but most CPAs or accountants, they're really good history teachers. You come in, you bring in last year's documents, they run the numbers, and they say, hey, this is how much you owe, or this is how much you get back, and here you go. Where that's tax preparation. And that's looking, I kind of view it to looking through the rearview mirror when you're driving, okay? If you're driving every day in the rearview mirror, that's not usually safe, right? We want to look through the windshield when it comes to tax planning. So it's not looking at, how much tax liability did I create last year, but how can we plan for future years and minimize your tax liability for the future? With current tax laws, we have until 2025. But the current administration could raise taxes even sooner, so tax planning is so crucial.
Okay.
I want to maximize my clients' income, but really minimize their tax liability. But it's a change in gear set, because a lot of CPAs, accountants, they tell you defer, defer, defer. 401ks, IRAs. But I'm going to tell you, if you keep on deferring, you could be creating a huge tax time bomb for yourself, for your spouse, for your beneficiaries. So we want to make sure that we don't do that. We want to make sure that we plan ahead, and that may mean paying more taxes now so you pay less taxes in the future.
Which makes sense, Jordan, because wouldn't you want to pay taxes when they're lower, like right now?
If
Because we
taxes
don't
are
know
on
it.
sale, I want to do it now, right? I don't want to pay full
Absolutely.
price 5-10 years from now.
That makes perfect sense, and I love how you actually have that in the plan, if you will. So we're about ready to open up the phone lines for the very first time to the viewers at home. Jordan, can you tell them what they can expect to receive by calling in today?
Sure. Many people, when they first come and talk to me, they have questions on when's the best time to take Social Security, how can I make sure that I'm not subject to a big market loss if there's a correction, or hey, Jordan, how can you guarantee that I can never run out of money? Our safe and secure retirement roadmap process will cover all those questions and so much more. Your retirement is not out of your control. It's not up to chance. It's not up to circumstances. Your retirement is fully in your control by the decisions you make and the plans you choose to implement. Whether you have $500,000, $1 million, or $5 million, we can create a comprehensive financial plan so you will have a safe and secure retirement. If you're serious about your retirement, please call 866-499-3454, and I look forward to sitting down with you personally and making sure that you have peace of mind.
Jordan, thank you so much. To the viewers at home, the phone lines are now open. That number to call once again is 866-499-3454. We know you have a lot of questions about how to retire comfortably and with confidence. Jordan has the answers for you. All you have to do is take advantage of the complimentary consultation by picking up the phone today and calling 866-499-3454. Now, don't go anywhere. When we come back, we're going to have some questions for Jordan about 401ks, and you're not going to want to miss his response. Stay tuned.
Hi, I'm Jordan Flowers. I've been with the Wealth Financial Services and Tax Advisor for over 15 years. I grew up in the Chicagoland area, and I've lived here ever since. As a fiduciary firm, we take a personal interest in making sure that you are taken care of. How do we do this for our clients? Well, we create for you a personalized retirement income plan so you see exactly where you're at, where you're going, and how we can get you there more effectively. I will show you your safe and secure retirement roadmap. roadmap, an income plan to maximize your income, but also minimize your taxes. And we'll talk about what we may recommend and see if you're comfortable with the risk we're proposing. Depending on what your needs and your goals are and how simple or complex you would like me to go over the plan, I will curtail it to you personally. Some people like to go into the details, and I'm happy to do that. Some people just want to know that they're going to be okay. My goal is to make sure you have a safe and secure retirement, and whether we want to go into more details or less details, I want to make sure you're comfortable with whatever decision and whatever plan we implement. If you're focusing on your investments every single day, you're not enjoying the longest vacation of your life. Make sure that your risk is in line with what your goals are. When someone becomes a client of ours, we take that very seriously, and we look forward to working with them and their family for generations to come.
Welcome back to Safe and Secure Retirement Television. My name is Cynthia DeFazio, and I'm joined today by Jordan Flowers. And Jordan is Retirement Planning Specialist at Wealth Financial Services and Tax Advisory. Jordan, a great show that we're having today, again, talking about the importance of factoring in tax planning, if you will, when you're entering the retirement years. I want to talk to you a little bit about not only the tax planning piece, of course, because we tapped on that, but also 401ks.
Yeah.
You know, a lot of information to cover right there, but what is the difference primarily between a 401k and a pension?
Well, let's go a step back. Back 30 years ago, many people retired and it was a little simpler. It was easier. They had a big pension, they had Social Security, they got a gold watch, and retirement was simple. But a lot of companies over the last few decades, they realized by keeping the pension afloat, it's very costly, a lot of risk on the company. So what companies have done over the last 20, 30 years is they shift the responsibility off of themselves and put it on the individuals by using a 401k. So they help them fund the 401k, but ultimately it's up to you or yourself to really make decisions on investments and live off of that money in retirement. And I think a lot of people think about 401ks right now, how much can I make? Well, remember, before 401ks, there was pensions. Pensions were meant to give you guaranteed income for life. Everyone loves that.
Right.
Okay, 401ks should still have the same goal in mind, to give you guaranteed income for life. But a lot of people kind of are too aggressive in 401ks, and they aren't really educated how you distribute those 401ks to live on for a long and great retirement. So 401ks, just a little bit about them, they're taxable, federally, and depending on the state, they could be taxed in your state. Not all states tax 401ks. If you move a 401k, a lot of questions I get is, hey, Jordan, should I move my 401k to an IRA? Okay, that's a good question.
Sure.
A lot of factors, though, come into play. So say hypothetically you're 55, you just retired, you might want to keep the 401k in the company plan. Because if you take distributions out while you're 55 to 59 and a half, you will not have a penalty of 10% if you take it out of your 401k. Where if you took it and moved it into an IRA and you took distributions out before 59 and a half, you have to pay a 10% IRS penalty. So for that situation, sometimes you want to keep it in the 401k. But for a lot of people, once they're 59 and a half and they're allowed to take that 401k into an IRA, or they just retired and they want to move that 401k into an IRA, I want to give people peace of mind that it's not a taxable event when you move that. And if you do move that to an IRA, it gives you so many more choices of the investments that you can choose from. A lot of times I see someone with target date funds in their 401k, target 2030, target 2035. And back in the day, target date funds are really set up where, hey, as you get older, they're going to shift from equities into bonds. And right now, we are in such a low interest rate environment. I don't believe people should be putting more money, a lot of money into bonds right now, because if interest rates rise, your bond portfolio is going to decline. And a lot of people think, oh, I'm taking less risk by going, more into bonds. But to me, you're taking a lot of risk because of interest rate risk.
Sure.
And that rate of return on bonds right now is barely even keeping up with inflation, and you have all that risk to go along with it. So if you look at your portfolio, or for those that are watching the show, and you have a target date fund, you gotta review that. You shouldn't have a lot of your money in a target date fund right now, because bonds, in my opinion, are not the best place to go.
Yeah.
So by moving into an IRA, you have so much flexibility in the options that you have, all different types of investments, and you can actually move it into investments that will give you guaranteed sources of income. You never have to run out of money. You know, there's a statistic out there, I don't know the exact number, but it says people live a longer, happier life with the more guaranteed income they have.
Makes sense.
So
Peace of mind.
Yeah, if you're guaranteed $100,000 a year, you don't have any worries.
Yeah.
If you're worried about taking out $100,000 a year and the market's volatile and you're forced to sell at a loss, that can give you some stress.
Absolutely.
You might be looking at your accounts every day stressing out. So we want to make sure that we take the appropriate measures, create a comprehensive plan, and really know more about your entire picture before we advise on the 401k. You know, sometimes 401ks, they have a advisor attached to it, or they give you investment advice online and say, hey, based on your age, you should be more conservative. But how many times does that 401k ask you, what about your Social Security benefit? What about your tax plan?
Yeah.
What about your estate plan? You know, their job is just to look at that 401k, or us as fiduciaries, as a comprehensive company, we look at the 401k in combination with Social Security, your pension, all these other things that are factored in to make sure we give you good information. Not cookie-cutter information, but personalized information that can benefit you and your families.
I love that, Jordan. Thank you so much. This is a great, actually, caller question that came in. It says, they recommended a product that has no market risk, but it could make about half of the market growth. Jordan, is that a good investment?
Well, it depends, and that's an answer that I have for a lot of questions these days, because I don't know the caller's question or his full, financial outlook, right? I got to know more detail. I need to know his financial vitals. Okay, what he may be referring to is maybe an equity index annuity, where you get the portion of the market growth, but none of the downside risk. Now, there's pros and cons to every single investment out there. Stocks, you can make a lot of money, but you can also lose a lot of money. Checking savings, you're not going to lose a dime, but you're not going to make a dime, or maybe you'll make a dime, if that, in your checking and savings. Where equity index annuities, they're a little bit different, because sometimes people hear the word annuity and they think, oh, they're bad, or someone told me they're horrible. It's like, there's different types of annuities, and that's why I like to educate people. Not all annuities are bad, not all stocks are bad. It just depends on your individual situation. So for that caller, if you look at your overall plan, and if you're more conservative, you might have some money in a fixed index annuity. My grandparents, for example, my grandfather was a Korean War vet, and he won a Purple Heart. He had 9 gunshot wounds. He went through a lot of trauma in the war. And when he came back, he couldn't handle stress. So when the market was up and down, he's like, I can't handle this. So he actually got one of those fixed index annuities, because he knew that when the market went up, he's going to make money. Maybe not as much as the market, but he'll still make competitive returns. But what gave him peace of mind is when the market fell apart, or it does fall apart in the future, he had peace of mind that he didn't lose a dime. So it helped him sleep at night. And for people that are more conservative, or for people that want more guaranteed sources of income, fixed index annuities could be a good fit. But I'm not pro annuity, I'm not con annuity. It just depends on the overall financial plan and what your goals are.
Sure. So again, it comes down to the fact that it's really not one size fits all. And you take the time to get to know each individual client that comes into your office to see what their hopes and their goals are for retirement.
Absolutely. You can't say all your money should be in this basket. You need diversification. And I think annuities can provide some diversification. But it depends on the client. I have some clients that they're just like, I want to be super aggressive, and I'm going to help them minimize their risk. And I have some clients, Jordan, I don't want to worry about the stock market. More of your money should be maybe in an annuity. Competitive returns, no market losses, but it really depends on the overall plan. And I know we always talk about taxes, and I interlay tax planning along with everything. Some of those annuities actually give you bonuses. I'm not saying that's why you should ever get an annuity, but from a tax planning perspective, say you have an IRA and you put money into an annuity with a bonus. Usually for a lot of these companies, if you convert that to a Roth within the first year or two, you can actually move money into a tax-free Roth IRA bucket and not pay taxes on that bonus. It's a fantastic strategy for some people, but it has to take into consideration all your financial vitals and make sure it's a good fit for you.
Absolutely. Well, Jordan, this is the perfect time for us to reopen up the phone lines to the viewers at home. Can you tell them what they can expect to receive by calling in?
Sure. Many people have so many questions about Social Security and when's the best time to take it. Some people say, how can I create a tax plan to pay the least amount of taxes possible? Other people are worried about, will I run out of money? How can you guarantee that I'll have income and never run out of money? Those questions and so much more are answered in our Safe and Secure Retirement Roadmap process. We're going to go over your entire plan. We're going to make sure that your retirement is fully in your control. We're not going to let the market or tax rates impact your personal retirement. Whether you have $500,000, $1 million, or $5 million, we will create a comprehensive financial plan to ensure you have a safe and secure retirement. But I urge you, if you are serious about your family's financial future, please call 866-499-3454, and I look forward to sitting down with you in the very near future.
Jordan, thank you so much. To the viewers at home, the phone lines are once again now open. That number to call is 866-499-3454. We have to take a very short commercial break, but don't go anywhere. We're going to have so much more when we return. Stay tuned.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to Safe and Secure Retirement Television. My name is Cynthia DeFazio, and I'm joined today by Jordan Flowers. And Jordan is retirement planning specialist at Wealth Financial Services and Tax Advisory. Jordan, a great show that we're having today, and I know the phones have been going crazy. I wanted to ask you a question. Who benefits the most from taking advantage of this consultation that you're offering?
That's a great question, Cynthia. Although I love to help so many people and have a good retirement and benefit them, our Safe and Secure Retirement Roadmap process is really designed for those that have $500,000 or more of assets, and people that usually have more 401k or IRA assets, because those are very tax hostile. So we want to make sure that we weed out the taxes of those 401ks and IRAs, and having $500,000 or more helps us to really benefit those clients the most, because when tax rates go up, which I believe they have to, a lot of people are going to get blindsided. And if you have, especially in IRAs, over $500,000, you have a huge ticking time bomb, because even though it says your name on that statement, whatever that value may be, you don't have that much in your account or in your hands because you haven't paid taxes on it. A lot of say, I'm debt free, I paid off my mortgage. And a mortgage, you're happy when you get it and you're happy when you pay it off.
Yeah.
But for an IRA, even though it says X amount on your statement, you don't have that money because you have a tax debt. And who controls the tax debt is the IRS. I don't know about you, Cynthia, but I like to have control over my money.
Absolutely.
I don't want the IRS to dictate how much of that portion goes to them as a beneficiary, right? I want it to go to my beneficiaries and to myself, not to the IRS. So for those that have $500,000 or more, we really try to help them minimize their taxes and pay the least to Uncle Sam, because you worked hard for the money. You put decades in. Now you want to get the most out of your IRA. Now you want want to get the most out of Social Security, and look at the overall roadmap to make sure you have a comprehensive plan and you're in the best place possible.
Jordan, how important is it for someone to be working with a fiduciary when it comes to planning for retirement? And for those in the audience who may not know what the fiduciary standard is, let's talk a little bit about that.
Yeah, fiduciary, if you go to a doctor, they're a fiduciary, a lawyer, they're a fiduciary. We're legally responsible to put your interest ahead of anything else. If we can help you, we're going to help you. We're going to do in your best interest. Sometimes people go to a broker or a salesman, and their job is to promote their product or flavor of the day. As a fiduciary, not only do we can't make a recommendation until we know everything about you, because that would be doing you a disservice.
Sure.
And we need to know what the best recommendations are, but we are going to legally tell you what's in your best interest, because that's important. And I don't think anyone watching this wants to be sold a product or be in a cookie cutter plan, but the sad reality is for a lot of big box firms, they have people that work for them. And the people that work for the big box firms, they're told, they have a manager saying, we need to hit X and X quota every single month. And for that month, they're pushing this product or this investment. But is that in your best interest?
Yeah.
You know, we look at a simple example, you know, what if you could get an investment over here that was charging 2%, or you can get an investment over here that was charging 1%? Well, the salesman, you know, might say, oh, here's the 2% investment. Whereas a fiduciary, what's in your best interest? I'm legally bound to show you, hey, this is a lot cheaper. This is what you should do. So having that fiduciary standard and really doing what's best for our clients, and not only is it good for them, but it's good for me. I'll be honest, it generates so many referrals.
Sure.
When you do good to people, word of mouth spreads.
Absolutely.
And when you get a referral, it's the greatest feeling in the world, and helping people really gives me joy. So I love being a fiduciary. I love helping people, and anyone, whoever you work with, you gotta make sure they're a fiduciary. And I'm gonna kind of up that one more time. Make sure that they're gonna be around for the duration of your retirement.
Yeah.
I see my peers. My peers are nearing retirement themselves, and sadly, not all of them have a succession plan in place.
Wow.
So if you're going to work with somebody for the next 20, 30, 40 years, make sure they're in position to be there for the next 20, 30, 40 years.
That makes sense. Jordan, we have about a minute and a half left of the show today, but I wanted to ask you, what does it feel like when someone first walks into the office to meet with you?
It's a warm and fuzzy feeling, I like to say. You know, we like to greet people by their first names. We like to have a warm environment. They're going to come into our office, be greeted nicely, big conference room. We got lots of orchids. If you look on our website, we got fresh orchids everywhere, little botanical garden there for you, but we like that calm environment. We don't have the TV with the stock market going and create stress. Right. We have a very tranquil environment, because we want people to have peace of mind when they first walk in the door, and they're going to have even more peace of mind when they leave. But when they sit down with me, we're just going to have a conversation, just like we're doing now. See what your goals are, see what you're trying to accomplish, and see if we can put you in a better place. I'll be honest, I can't help everyone, okay? But the people I can help, and we can give them a safe and secure retirement roadmap, we can really ensure that they will have peace of mind, and they'll maximize every dollar in their comprehensive plan.
And that's really what it comes down to, Jordan, is having peace of mind, especially in the retirement years, because nobody wants to wake up in the morning stressed about what happened the night before.
Absolutely.
Correct. Well, Jordan, I can't thank you enough for another amazing show this week, and I know the viewers at home have enjoyed it as well. To the viewers at home, thank you again for spending time with us. That number to call is 866-499-3454. We know you have a lot of questions about how to retire comfortably and retire safely. Jordan has the answers for you. Again, thank you for spending time with us. Be safe, be happy, be blessed, and we'll see you back here again next week.